Hey guys, welcome to another video. Welcome to a new video. So in this video, I'll be talking about the ideal trading routine. I hope you guys stick around to the end of this video because I promise you guys, after watching this video, you will start seeing trading in a different light. So without further ado, let's dive into the topic for the day. And yeah, as I said earlier on, the topic is the ideal trading routine. So yeah, what do I mean by the ideal trading routine? What I'm saying here is that trading, you have to have a set of routine, a consistent set of routine you use to tackle the market. Like you have to have a set approach to the market. You can't have a random approach and a random routine and you put it in the market and you expect a consistent result. No, you have to be consistent with your approach and you have to be consistent with your routine. So, what are these ideal routines I'm talking of? First of all, you have to journal your trades. This is very important, guys. Journaling is very important. You have to track your data. Tracking your data is going to give you more insights on your trading habits, which normally will be hidden in your subconscious because you might be making some errors trading, but you not finding the time to review your trades and to put in the dots to see the consistent errors you have been making, like the repeated errors you have been making, you won't make any progress. So journaling is very important. And what are you aiming to accomplish with journaling? There are a lot of things you can accomplish with journaling. You can get clarity, you can improve your approach, and you can know where you are lagging and where you should put more focus on. So one of the things journaling will help you with is journaling will help you know the days you are more likely to perform better. So I know most of you guys will know, but there is a day of the week that is said to be high probability day for any trading setup. So journaling will give you insight on what day you perform better just by going back to your data, looking at your trades on a weekly basis. You might find patterns. Say on this day I noticed I am mostly positive at the end. Like why is it that? And this will now open your mind to more market behaviors that you've been blinded by before. So journaling can open your eye to that. And what again will journaling help you with? Journaling will journaling will help you know what days you perform poorly too. Most of the time, they will say don't trade on Monday or don't trade on Friday, but you don't know the reason they say don't trade on Monday or don't trade on Friday. It might be those days are low probability, but you still don't know why they are low probability. So journaling and your experience will give you insight on why Monday and Friday are said to be low probability trading days. It might be that Monday there's a low volume, or on Friday the volume dies out, or Monday is a range bound day, or Friday is also a range bound day. But journaling is going to see your performance on each of these days. Like you might go back to your previous trades and notice that you take losses mostly on Mondays, but before you were just blinded by the fact you're just taking random trades. But now going back to your trading, you will now see it, like I take more of losses on Monday and Friday. Why is that? Okay, what can I do about it? Should I remove trading on Monday or remove trading on Friday for my trading plan and see the how the results on it? That's what journaling can do. Open your eye to some errors and some mistakes you do make, but you've not been aware of. And what again will journaling help you with? Journaling will help you know the sessions you perform well and the sessions you perform poorly. Most of you people won't know that there are some sessions that you might just naturally just feel comfortable with, or some sessions where your mental health might be in flow with the market, or where your mental health might be healthy to approach the or to tackle the market. It might be okay, you are doing better in London session, maybe because you after week you are active more in the morning, like after you've had your sleep, wake up, done your morning routine, you tackle the market, and you are more profitable than trading in New York session after you've already started your day by a lot, and maybe some events have happened in your day which will mess with your mentality or your psychology, and you might be pissed for the day, and you now take it to New York session trying to look for trade, and you might figure out that maybe you're not that profitable in New York session, and or New York session is where you take the most loss. So you can just decide to write off New York session from your trading plan and decide, let me just focus on London session, which will be more profitable for me. Or and you can just look for ways to implement this to your daily routine. Like, okay, if I'm trading London session, I might just skip going to the gym in the morning, and after not trading London session, I do my morning routine, and then later in the day I go to the gym. Or if you are profitable in New York session, you might decide, okay, I'll go to the gym early, like in the morning time, since I'm not trading London session, so I get back on time, for fresh up, then do my pre-market routines to get ready for the New York. So this is just what the journaling will help you with. And journaling also will give you insight on what position size you're most comfortable with. Like, some people might not be aware of the fact that anytime they take high leverage or they increase their risk, they are more likely to take a loss, or they are more likely to make trading error, like closing trade on time, moving your stop loss, and the rest, and those type of trading errors which come with emotion. Increasing your position size, you might not know the effect, but once you journal and see, okay, anytime I tend to increase my position size, I notice that I don't let the market play out. I close my trade on time and I move my stop loss. I'm just prone to making some trading errors. So you can decide to reduce your position size, reduce your risks, so you can manage your emotions and reduce the impact of your emotions on your trading decisions. So yeah, this is what journaling will also help you with. And how often do you trade? Journaling will keep a track of if you are over trading, and the numbers of trade you take in a day and in a week. Just generally the amount of trades you take and the reasons behind each trade. So yeah, journaling is very important. There's a lot of software out there you can use to journal. There's a TradeZella. I think you guys should check it out, but they have a paid service there. And what I use mostly, it's my Excel. So I come up with some Excel formulas. I just put it in here and just try to make a personal journal for myself, because most of the software out there are mostly paid. So I just decided to, on my spare time, just create an Excel journal for myself and keep track. This was the first funded account I traded, and just looking on my spare time, I just go back to the data and it just feels hilarious, because I had a win rate of 31%, total trades of 900 trades. Guys, imagine. It's not even up to, let's see, I took this 900 trades. I'm not sure it's up to 2 months. The first trade I had was on June 20th. So from June 20th to August 11th, 900 trades. That's June, July. That's 2 months, guys. In 2 months, I took over almost 1,000 trades. This was my early days. This was the first account I traded. I was trading impulsively, not just having any method or having any approach to the market, because how on earth will a normal person take over almost 1,000 trades in 2 months? I was just retarded. Like, I was just trading anyhow, because I didn't know how to manage my emotions, and I was just trying to pass my challenge. So this was the outcome. Initially I was making progress on my balance curve. As you can see, I remember exactly my balance got to, I think it was 6,380. Almost just needed a couple $100 to pass the challenge. That was when my psychology kicked in and I went on tilt. See this downwards spiral movement. because I just overtaking bunch of unnecessary trades. So that's what psychology does. And tracking my trades, since I tracked my trades and I know this is an example of what I'm saying, guys. So yeah, that is what journal you can do. And this when I tracked my profitable hours and days. I wanted to know the session and the days I'm most profitable, like doing those 900 trades I took. I wanted to just know the days that would have been more favorable for me if I had just double down and focus my attention on those days. And since doing this journaling, I can say for a fact that my trading has improved significantly, and the approach I now use to tackle the market is a more systematic approach than just a random impulsive trading decision and emotionally placing trades during my first funded challenge tackle. So yeah, that's the importance of journaling. So the next routine now, guys, we need to implement in our daily habits is pre-market game plan. So you have to have game plan going into this session, going into the day. You can't just wake up, let's say you trade the London session and you just wake up by 7 o'clock or 8 o'clock and just decide to jump on your laptop or your phone and just place trade. That is not how to gain consistency on the long run. You need to have a game plan. Like you need to set out what your plan is for the day. This can be done an hour before the session really starts, or 30 minutes before the session, your trading hour. And you need to have steps use and things to set out to know how your day and your trading day will go. So once your trading session starts, you don't be emotional about what do I do now, what am I supposed to do now. You already have your game plan in place, so you are just tackling the markets based on what you've already planned before the market started. So you are ahead of the market now, so the market can't phase you, the market can't make you make impulsive decisions. You already have a game plan, and your mentality now is now stable, calm, and your focus is just on following your game plan. So what should your game plan tell you? Your trading hours, the time of the day you should sit on your laptop or your computer or your setup with looking for trading opportunities. It can be 2 hours, 3 hours, depending on the session you trade and when you've done your research on when volatility kicks in the market. So this what your pre-market game plan should have, your trading hours. And what should it have again? How will you analyze? Like how do you analyze the day? Like what are you expecting on the day? And what is your bias for the day? What direction are you looking to take? What trade? Like what are you looking to take long? Are you looking to take short? And why are you looking to take long? What was the previous day price action? Like what's your insight, and what's the probability for the day going up or going down? This is what your plan will state out clearly for you. And what again you should have in your plan that is very important is your risks for the day. You need to set a risk limit. It can be I'm not going to lose more than 2% this day. Today, that's my risk limit for the day, 2%. Anything above that, I've gone against my plan, and you now go back to journaling and looking at the reason why you did above your risk limit. And what should you have in your plan again? How many trades are you allowed to take? You might be saying, okay, I might take 3 trades today. I might take 2 trades. And after exhausting my trades, I'm going to end the day and wait for the next day to come. So yeah. So and another thing you need to have in your plan is how would you execute your trades? Will you enter your full size once, or will you have your risks? Give yourself a margin for error to take a second entry if your first trade hits stop loss. So what this is saying is that your 2% risk, are you going to enter it once in a single trade setup? Like maybe you see an opportunity to go long or go short, you now do your position sizing, your risk management, and you decide to take in the full 2% risks on that trade, or will you half it and decide to go 1% and see how price you can see what price does and the willingness for price to either move against or move in your favor, and know if you can then add the extra 1% risk. So yeah, and what news events are coming up, and how to anticipate them, like what economic data coming up today, and how is it going to affect my trade, and how is it going to increase my risks, because it's a very bad habit or bad out like experience of placing trade and having spread the news event, the volatility that comes with the news, increasing spread and taking you out in a more larger loss than you've already planned. So you have to factor in all this in your plan and know how to position yourself, either trading after the volatility of the news or trading before that. So yeah, how will you manage your trades prior to the news? That's what I just said. How will you manage it if you are in a trade before the news? Are you going to close your trade because you are expecting a high volatility coming into the market because of the news, or are you going to reduce your stop or put your stop to break even, or take a partial? It's just you just have to be clear on what to do and write it down so you know what you are doing, and when the event happens you won't be emotionally stressed on what should I do now, and you're now giving chance for your emotions to play and give you decisions which at the end won't be the right thing for you. So yeah, the next is post market review. What this will do is just to give you clarity on how disciplined you are. Like, you ask yourself, did you follow your game plan for the day? If you did, if you didn't follow, why didn't I follow my game plan? I took the time out to write out what my game plan was for the day before the market session. So what reason do I have not to follow my game plan, and how is this going to affect me in the long run, and what steps can I take to prevent this error from occurring again? So that's what your post-market review does, and it now gives you insight on what did you do right. Like, okay, did I manage my trade well, or did I let emotion make decisions for me, and what did I do wrong? Did I close my trade because I wasn't sure price was going to move in my favor? All this will give you insight on how you tackle the trading day. And after doing the research on this, you now know what to improve on. You now say, okay, maybe I closed my trade because I was not sure of what the market was going to do next. That's now when you now analyze that, and you now figure out that the reason you were not sure is because we were looking for uncertainty you were looking for certainty in an uncertain environment. The market is a probability game. There is no, your thinking doesn't matter in the market. What your opinion is doesn't count. Your opinion means nothing to the market. So you thinking is the first step you've done wrong. You are not supposed to think anything. What you are supposed to do was my edge there? Was my strategy present in the market? If yes, execute. If no, don't execute. There's nothing there to think about. So your first error was thinking, and then you cannot decide to write a process to tackle this for the next time. I'm not supposed to think during a trade. I'm just supposed to accept probability and calculate my risks. That's just it. So after that, after the day and the week, you do your weekly review at the end, mostly on Friday or Saturday. This is why I do a weekly review mostly on my YouTube channel. On this channel, I do on Friday and on Saturday. It helps me more than I can tell, because it helps me become accountable, and it makes me go through the process of reviewing my trades and looking at how I performed and where I can improve on. So what this weekly review does is, how many trades did I take? Okay, this week, how many trades did I take? Did I take 5 trades? Did I take 6 trades? and you look at what was my win rate. How many trades did I win? Out of the 5 trades, did I win 2? Did I win 1? And you now ask yourself, okay, can I improve my win rate in the coming week? Or where can I improve? What can I tweak to make me have a better win rate? It might be, okay, I should become selective in the trades I take. I shouldn't just take any setup. I should look for a better setup to present itself before executing the trade. This might help me increase my win rate. Yeah. So the next step is, what was my risk consistent? So this is a very important question, because you might, let's say you might take 5 trades, have 3 winning trades, or let's just say you might take 4 trades, have 2 winning trades and 2 losing trades. That's 50% win rate, which sounds nice on book, like in book. So let's now go through the errors you made. Let's say in those 2 winning trades, the first trade you took, you had a 0.5% risk and you won that. So you've gotten, let's say your risk to reward is 1:3. So you had plus 1.5%. So now the second trade you took, you had a loss, which was, you now decide, okay, because the last trade was 0, I won the last trade, they now decide to increase the risk to 2%, and you now took a loss on that trade. So now you are now back to 0 point plus, no, you are now back to negative 0.5%. So now the next trade you now take, now because you took a loss, you now decide to reduce your trade back to 0.5%. So you now got the 1:3, and now you are now up 1%. And the next trade you now lose, okay, you now decide to keep your risk constant to the 0.5%, you now lose 0.5%. So you are now back to just plus 0.5% for the week, which if you would have left your risk consistent, you would have been up more than 0.5%. Let's say you just used a 0.5% risk all through for the 4 trades, which would have meant if you lost the 2 trades, you would have been minus 1%. And if you had gotten the 2 trades, which is 3, you would have been up plus 2% for the week, which is very huge. You can see the very huge difference between being negative, just up 0.5% because of inconsistent weeks, and being up plus 2% because of consistent weeks. So having your weeks consistent is very important. And so what your weekly review should state is, what errors did I make? What trading errors did I make this week? And what can I do to prevent it from reoccurring the next week? So that's just it. And what did I do right? That's same thing. What did I do right, and how can I keep this and continue improving on it? So yeah, and what you should do on weekends is go through your trading plan. After you've done your weekly review, done the rest, you go through your trading plan, and where should I work on my trading plan? Should I work on my risk management? Should I work on my psychology? Should I work on my analysis? Where exactly should I work on? Should I work on my strategy or my execution? Where should I work on? So what can I add to my plan to optimize my result? That's it. What can I add to my plan? Should I add a rule on the assets to trade, or maybe I should add an extra asset to my trading, or should I reduce? What can I tweak to just optimize my results for the plan? And again, what is the current goal of my trading plan? Are all my rules involved in my trading plan going to benefit me in the long run? Are they for my benefit in the long run? That's what your trading plan should be. Your trading plan should be a blueprint for your success in the long run, and what you are to achieve if you follow diligently the rules you've written down. And what isn't serving me well on my trading plan? It might be the way you have your risk management placed. It might be your psychology. It might be your strategy, having a tight stop loss. You might decide to, okay, I should just increase my stop loss by a few pips and see the result of what happens the next week. So yeah, guys, this is just a breakdown on the routines that are really going to help you build your character in trading. And I promise you guys, if you are consistent with this routine for 6 months, because I've given myself a challenge to follow my routine for 6 months, and the next year I'm going to obviously see a huge result in my trading, because I just started being really focused on trading this year, February. So I've already, this year February, I didn't know anything about the approach to trading. I didn't know what concept. I didn't even know any strategy. I didn't know and have any idea. The only thing I knew was that I had a direction to go watch YouTube, go watch SCT on YouTube. So that's where I started from February, and I've been learning on my own, trying to develop it by trial and error, just learning concepts, and till now, up until this moment, I've seen a huge impact, and I've seen a huge improvement in my trading and in my mindset. So next year is going to be a really massive year for results. So I hope you guys follow in, and let's do great things in this industry. So yeah, guys, thank you for sticking around, and this is just a quick breakdown on some routines that are really going to help your trading approach and the way you tackle the market. So you see you guys in the next video, and promise to blow your minds with a new video coming up soon. So yeah, thank you for sticking around. Peace.